Hi, this is John Lowe from the 2018 30K Challenge. Going to go over a couple things working around the pattern day trade rule. I'm not saying that we're actually breaking it because there's no way you can actually not get into trouble by making more than 3 day trades in a week. But these are sort of some ideas, that strategies that you can sort of work around that issue. Okay, and it might involves taking on a little bit more risk, but if you see a good trade and you really want to take it, there are ways around it. Okay, so I'm not a profitable trader, don't have a financial degree, I'm not a financial advisor. um, you know this is just a theory based on my own experience and what I've learned in the stock market. Do not take any of this as investment advice, and seek your professional advisor before making any investment decision. Once again, anything you like here, hit the like button, subscribe to my channel, tell your friends about it, and click on this link to open up your own Tastyworks account. All right, so let's go over to my Tastyworks account and take a look. What's going on here? Personally, right now, I do not have any day trades to take, although I do want to take NVDA long today. We got like almost a 4-point window here. If I can find a good risk versus reward, I can try to do that. A way I'm going to try to get around that pattern day trade rule is this. I'm going to create a defined risk trade. Okay, so I think NVDA is going long. I could go out to a week from now, maybe 11 days from now, and if I think it's going long, and these are $2.50 windows, long call vertical, what I'll do if I see a good risk versus reward delta. So doing this, I'm going to create a vertical spread here. So my max risk is going to be $1.10 here. If I move this up this way here, like these two, my max risk is $1.40. If I move this way, is 92 cents or $92 per contract, 81. So here is a way you can do it, in my opinion. What you're going to do is, okay, so you're going to delete this leg right here, the one we're selling, okay? And so if you see a trade that you like, you're gonna have an idea that you're gonna get into this trade here, okay? Let's see, let's go. So NVDA, looking at this here again, let's say we want to get long above the pre-market high here, and you want to set a stop of, let's say, 50 cents. You probably want to set a stop of about $1, okay? Because this thing whips around so fast. But you want to use the 9 EMA as your support. So if the 9 EMA on the 1 minute, 2 minute, 5 minute pushes this through here, then you want to take a trade somewhere around here going long, and you want to have a stop of about $1 because it can whip around pretty good. So swing entry is about here. Your stop, let's say 248, 247, 30-ish, like that. Okay, that'll be your stop. So, what are you going to do here? All right, so 248.33 is your entry. That's when you hit the send button. When it goes below, depending upon where the 9 EMA is, you can move this up and keep it tighter. Maybe this would be a good spot right here to go to cut your losses, maybe about 80 cents. Okay, so 247.51. So what you're going to do here, oops, I don't want to do that. I'll fix that later. Okay, so as it goes above your entry price, you hit send. Okay, once you hit send, you're gonna watch the chart, and if it looks like it's going against you, what you're gonna do is then you're gonna click on this one because this one is gonna be already in play. Okay, you're gonna click on this one right here, and you're gonna sell this to open a trade.
An alert target has been reached.
Sorry about that, guys. Let's see, desktop. Maybe I can mute that. You're gonna sell this one um, to open the trade, and then that will give you a defined risk. Okay, so there's your defined risk of 92, or maybe I did it this way here. Yeah, it was this one. So 250, 250, and 255. Okay, so you enter this trade when it hits your price. You immediately go in there and you go back into this, and then you're going to look at 257. You're going to look to sell this to open. Okay, so if it starts going against you, you open a trade here, and then you'll have a defined risk earlier of $59, basically. Does that make sense? If it doesn't, do some homework. uh, you can go on Tasty Trades and get to understand what a defined risk trade is. Okay, so I hope that helps you out. Go to Tasty Trades, click on Learn here, and you can go to the options and learn how to create a vertical spread. And you're gonna have to, listen to these option setups, or new to options and stuff like that. So that's how we can um, still trade without breaking the pattern day trade rule and still get a defined risk of how much we want to risk. All right, hope that helps you out. Makes sense. All right, we'll talk to you guys later. And yeah, bye bye.